The story for Southern California's apartment markets over the past couple of years has been one of gradual recovery with some real hit and miss results from quarter to quarter. So how's the region doing through the first half of 2012? We're going to take a look. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons. He's Greg Willett. And we're going to take a look at the 1.7 million apartment units spread out throughout the Southern California region. That includes Los Angeles, Orange County, Riverside, San Bernardino, and San Diego. And Greg, it's been no secret there's been a major difference between the red-hot Northern California markets and the not-so-hot Southern California markets. So did we see that performance gap shrink at all in Q2?
Really, we didn't. And again, quarterly performances are somewhat hit and miss in this region of the country right now. And if we have to characterize 2Q overall, I think we have to put it in the miss category. As you look at the results, you really see that in demand figures. So let's start with a chart that looks at quarterly demand across the Southern California markets. What you see for these four metros combined is that there were net move-outs from just over 3,000 units. The real culprit there was Los Angeles, where the number of occupied apartments dropped by 3,438 units from the April to June time period. A little bit of backtracking seen in really all across the product spectrum there. We also lost a handful of residents from the San Diego apartment market, and it was the second quarter in a row where we've had some move-outs there. Orange County and Inland Empire, the numbers were positive on the demand side, but pretty small and just lackluster in the big picture.
So overall, not good. Now, Southern California has been running behind the rest of the country for total job production of late, and does that help explain the lack of demand for apartments?
Well, let's dig into those employment numbers currently available from the Bureau of Labor Statistics. We'll look at annual change for the year ending in May, the most current numbers available. What you see is that across the region, there were 91,900 jobs added according to the BLS, translating to 1.2% annual growth for the region overall. By metro, the expansion pace is 1 to 1.3% in LA, San Diego, and Riverside, San Bernardino, somewhat better at 1.9% in Orange County. Jay, what you tend to see in California metros is that the employment numbers do actually get revised a lot, though, so you have to look at these taking some caution as to will these really be the final results. And really, they look kind of high relative to what's happening in the housing market overall. And so I really think that the only place we can be sure is producing at least a pretty decent block of jobs right now is probably Orange County.
And Greg, one thing that's helping limit the impact of weak demand in Southern California has been a lack of meaningful numbers of new apartments. In fact, occupancy remains in decent shape in all four of these markets, and in fact above the national norms, but still low compared to the typical rates that we see in these four areas. So we're going to show you a list here showing the 2Q occupancy rates by metro, 96.2 across Orange County, Los Angeles, and San Diego. Moderately lower at 94.8 in Riverside, San Bernardino, and really not much change in any of them on a quarterly basis. A little bit of progress year over year, with the results up 120 basis points in LA, 70 to 80 basis points in Orange County and in the Inland Empire, and 10 basis points in San Diego.
And Jay, as you pointed out, I mean, those occupancy numbers are decent, but they're really not going to be enough to generate significant pricing power in this part of the world. So let's look at those rent change numbers. Another graphic for you. This one looks at the change in effective rents, both for the quarter and the annual basis across these metros. There's one surprising number there, and that's going to be the 1.6% quarterly rent growth seen in San Diego, but in this case, that was really the bulk of the rent growth that occurred throughout the past year. The more meaningful number to look at here is what's the annual change figures, and by that measure, you've got Los Angeles on top, and it at least meets the U.S. standard with pricing up 4% since mid-2011. Orange County is close, posting 3.7% rent growth. Riverside, San Bernardino, and San Diego are the laggards. Pricing rose 2.5% in the past year in San Diego and just 2.1% in the Inland Empire.
And Greg, do we think that this slow and somewhat inconsistent pace is going to continue to be the story for Southern California going forward?
We've done a couple of videos where we've talked about Los Angeles and have pointed out that there is the potential for this one to break from the pack there. And the reason we think that is possible is that the performance level is just really getting right up at the edge of the level where operators would gain a lot more confidence and would just push rents more aggressively. So the one we're most optimistic about in this region is Los Angeles. The current performance stats look almost identical in Orange County, but we do think that they don't really get much better here, and that really reflects some new supply that's going to come online. Fairly big block of deliveries that finish up right at the end of the year, and that means those units are going into lease up right now. For San Diego and Inland Empire, again, the same trajectory that they've been on, modest growth, really likely there. And if there's one that's vulnerable, it's probably San Diego. It's interesting as you look at the San Diego numbers, and particularly 2 quarters of net move-outs there, that suggests that there's something wrong with the economy there. And when you talk to the locals, they focus in on you've had some military move-outs as people have been transferred to other locations across the country. But the losses in the apartment renter base are really occurring everywhere, just not exclusively around those military bases. So we think there's some just underlying weakness in the San Diego economy.
So that wraps up for Southern California. Until next time, for Apartment Market Dynamics and MPF Research, and for Greg Willett, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.